Unless you've been living under a rock, you'll know this company and its founder, Elon Musk, the CEO and largest shareholder in Tesla. The car company has taken off over the last decade, in more ways than one. But for the most part, people seem to be more hyped up about owning one of the cars rather than owning a slice of the company. In fact, people were parting with $50, $60, even $70,000 back in 2012 for a Model S. However, if you'd spent your money on Tesla stock in January 2012, when the market price was around $25 to $30 a share, your position would have risen by more than 5,000%. And in real terms, if you'd put $50,000 into Tesla stock rather than having a Tesla on your drive, you'd now have $2.75 million. One company, however, did achieve this monumental return. Baillie Gifford, the 112-year-old Scottish investment manager, initially bought up 2.3 million shares in 2012 and have since increased their holding to 12 million shares and a 7% stake in the company. That makes them the second largest shareholder behind Musk himself. Their investment philosophy and research saw that only a tiny fraction of shares accounted for all the market gains, which sees the firm focus on company potential rather than current profits. They even go as far as to locate their offices away from major financial districts, like Canary Wharf for example, to steer clear of market short-termism and focus on investing in companies with future potential. Since March 2013, they've spent an average of $202 per share. And as far as Baillie Gifford are concerned, the Tesla quarterly numbers don't really matter, because the most important question is what's happening in the transportation industry. Baillie Gifford are known for their market-beating returns, and their track record includes investing in Alibaba at its IPO, a return of 160%, and investing in Amazon, which has seen an eye-watering return of 7,500% over the last 16 years. However, according to a partner at the firm, it's not been an easy ride with Tesla, as they've almost gone bust at least twice during their ownership, and in the early days it was seen as a bit of a joke. The firm have even had to cut its position as it approached the regulation 10% limit on individual stocks within one portfolio. Best to call it a profit-taking exercise then, with the firm netting an $800 million gain in about 8 years, and with the share price now sitting at around $1,400, they've made in excess of $13 billion of profit, or £10 billion, albeit on paper. Whilst this isn't as amazing as their Amazon bet, which they bought into in 2004 when trading at $40, the Scottish fund manager's approach to investing is as inventive as Elon Musk himself, and they all continue to reap the rewards, as the stock split on the 11th of August will see increased liquidity and the share price continues to rise. And that's how it happened. Thanks for watching.